What's going on, friends? This is Leo coming to you with another update on Ethereum. And today we're going to be exploring the $45,000 Ethereum target. It's certainly a possibility. Um, it's less likely, of course, than my primary targets of 10,000 and 25,000, but I wouldn't be surprised if it hit 50,000. So let's go ahead and dig in here. I'm not going to beat around the bush too much, just going to get right to the point. So we're on the 1 week chart here. And as you can see, I've got some parabolic trend lines drawn up. If you've been paying attention to some of my other videos, you might have seen that I've done the parabolic analysis on Bitcoin, which has us putting the peak bull market somewhere around March of 2023. So I've essentially done the same thing here. And I'm assuming that the Ethereum bull market will peak somewhere around the March timeframe as well. And one thing that's interesting about Ethereum is how you get these massive spikes up whenever it has the bull run with very little retrace. But we've only seen one cycle level on Ethereum. If you go back to the very beginning, you'd have to look at the BLX chart for Bitcoin. It's Brave New Coin Index. It's basically an index of multiple different exchanges trying to get the most accurate and the longest price history for Bitcoin. That first little run up, you do see this really quick spike up because it's a very immature asset. There's not a lot of money behind it, so it doesn't take a whole lot of money to drive demand up to these inflated levels. And then you see, of course, the correction. So I don't expect the coming bull run to be as sharp as this. That would be quite ridiculous. A healthy trend is about a 45-degree angle, and that's, I mean, heck, that's, what is that, 75-degree angle? I don't know, I'm not good at estimating angles, but it's very steep. So that's not really a healthy trend. That's not a healthy growth. So I would expect if we're going to get a healthy run here, we're going to trend upwards at about a 45-degree angle, continuing on until we get into that parabolic phase. It's probably going to be about a year prior to the peak of the bull run. So that's going to be right around March of 2022 is when we'd start getting into that mania phase where it just gets stupid and it just, you can't lose money. You just buy every dip. If you were around for the 2017 bull run, you would remember that. But one thing I do want to point out here that I don't see anybody talking about is this white line right here. That's the 200 EMA on the weekly chart for Ethereum. We have the 55 EMA right here. So what that means is we're about to have a golden cross on the weekly chart for Ethereum. I think if we close this week, I think it'll cross. I certainly don't anticipate, unless there's a black swan event, for it to dump down below that and to cause it to death cross. That's very unlikely in my opinion. But that is extremely bullish. I mean, Bitcoin is it's been golden crossed for its entire existence. So, I mean, that should tell you something of where we're going with this. But so digging into this a little bit more here, I think what we have is a completed 5 waves up. We had our retracement for a 2. We did an expanded flat for the 2 here. And as you can see, I'll go ahead and zoom in. We are trending higher, and we are right at our resistance. We've actually broken through this period of resistance, but we do have these 3 overlapping candles here. That's congestion, in my opinion. If we get through that, we could congest here for a little bit before breaking higher. That wouldn't surprise me at all, or even to come back and bounce here before moving on. But essentially what we have is we're trapped in between the 377 and the highs up here at 480, 500-ish. That's pretty much where we're stuck. Actually, I can move this up just a hair. Get those candle body closes right there. That looks a lot cleaner to me. Tip of that wick touching. I like that a whole lot. Um, so now you're probably wondering, where the heck am I getting this $50,000 price target from? So let's go ahead and take a look at the Ethereum to Bitcoin chart that I had. I've had this up for a long time now. I think I stopped charting this fourth wave, and then it just came down there and hit it. So as you can see, we are gaining. Ethereum is gaining on Bitcoin. It's gaining to the Bitcoin ratio. So what we have is a 1, 2, 3, 4, 5 for a completed one wave, and then we get a WXY correction for a 2, and then I'm expecting a third wave to come up here. Now the most likely target for a third wave and Elliott wave is 162% of the first. So that's what this is right here. Why is that not? There it is. So what you do is you click here, you measure from the low to the high of your first completed 5 waves, and then you go to your low, and it projects it out. So I'm taking the length of this run, projected out 162% from here, which puts us at a 0.262% of a 1 Bitcoin. Now, if we get to here, that would put, and assuming that if you've seen my other video, I have a price target roughly around $100,000 for Bitcoin. So that's assuming we get there. That puts Ethereum very likely to hit around a $25,000, $26,000 target for the next bull run. If things get a little stupid, which it's very possible they do, we could see a 50,000 or, well, 45,000. I keep saying 50 because it's easier to round up, but you get the idea. About a $45,000 target, and that is because of the algo target, the -236. You see in all markets, what happens is they have computer softwares, and you'd have to dig in and learn about Fibonacci a lot more if you're not familiar with it. It's a lot to teach in a quick 10-minute video, but the basic idea is that you take retracements, right? So here's a 50% retracement from your high, and so they start buying here, and they continue to buy all the way down to the golden zone, the 618, so 62% retracement, and then their target is the -236. These happen in all markets, whether it's futures, stocks, everything. So they will continue to buy all the way up to here. Well, on smaller time frames. So like, for example, you would have off of the low there, you'd probably have, oh, look at that. I mean, I just found that easily. So you have your retracement, and it comes back, and then it continues. And they will continue to do that all the way up. So I would expect, if things do get stupid and we get a whole lot of adoption on Ethereum, I don't know if you've been paying attention to it. I've seen articles about, they're talking about making the digital dollar, the US dollar, built on top of the Ethereum blockchain, which, I mean, you're talking about a $50,000 Ethereum. Well, there you go. I mean, that would definitely do it. There's Coca-Cola talking about getting involved. There's just so much development, so much in the works to build on the platform that it's possible. It's very possible. I don't think it's likely, but it's definitely possible. We will get there eventually. In fact, I do believe we'll see a $100,000 Ethereum eventually, but that's when most likely we have like a $250,000, $500,000 Bitcoin. So it's possible. It's very possible. Let's get back over to here. Now, what would that look like on an Ethereum US dollar chart? Well, assuming that we've put in our 1, 2, right? And we're going to assume that this 200, this golden cross, is going to hold a support. I wouldn't expect it to break below the 55 EMA ever again. Well, for the next bull run, I can't project that far out, but for the next bull run, I wouldn't expect it to break the 55 EMA on the 1 week. Not at all. So I would expect from here 5 waves. Okay, so we're going to be looking for a 1, 2, 3, 4, 5, all the way up to that third wave target of around 40, 4,260 for a third wave target, which looks like that'd be around February of 2022 whenever we get there. So what I would expect to happen, given the size of this first move and knowing where we're going, and if I look over here at the structural resistance that we're running into, the next significant one would be around the 800 level. So if we zoom in here, it's very cleanly that you can see this, looking at the candle body closes, right? There's your structural resistance. So I would expect a one wave, possibly come back, bounce here, break through 2, 3, 4, 5 into that 800 level. And then we would correct for a something like that, basically. So we would correct down to here, possibly even here, really your most likely target. And that's actually, I really like that. It's funny how whenever you're doing technical analysis and you pull something up and it's just like, oh, wow, I really like that. That there's a lot of confluence there is what we call it. So by confluence, what I'm talking about is you have this red dotted line, structural support. You have your golden zone, most likely retracement for a first wave is going to be 62%. So you also have that nice round number there, 500 bucks. Markets love round numbers. So everybody's gonna be like, oh, I gotta buy 500. It's just this weird psychological thing that humans tend to do of liking round numbers. It's part of the reason why Bitcoin's top was around 20K. So I'm expecting, where is it? Sorry, I feel like I'm kind of rambling a little bit here on this video. Usually don't do that. I had too much coffee probably. So I'm expecting something like this. Those are way too big on their size. 1 second. Let me drop that down to a, yeah, that's better. Right? So that's what I'm looking at. And that would be a one wave of the third wave of this degree. I'm going to change this to blue for a little bit of context. So what we'd be looking at then is you get your retracement down to here. Once we peg that 800 level, come on back down to 500, and then from there we would launch. We would be looking for a third wave of the third. So you would have something like that. Although I need to lower that degree. Oh, damn it, no, that one's not the right degree. Okay, so but you get the idea. So basically we're moving from structural support, structural resistance and whatnot, and you bounce in there and you're getting these waves, and that's kind of the roadmap that we're looking at. And here, whenever you get down to this 2, you're gonna probably see a 1, 2, then lift off. It could just break through it, but 800 is going to be really heavy. It's going to be hard to break that level. I mean, yeah, that's going to be a solid resistance to get through. So I would expect something like this. You're going to get a 1, 2, 3, 4, and 5, and all the way to your third, and then we'll continue on from there. So that's kind of giving you a little bit of structure there. But now I kind of want to talk about managing, or how I would plan to manage my my stop. So I'm going to be targeting around 25,000 and 10,000. And what I'm going to do once we get close, right? So bare minimum, I'm looking at 10K. Most likely, my most likely target that my gut's kind of telling me is around 15,000. And so once we get close to there, I'm going to start trailing swings. And so what I mean by that is that this is a swing, okay? That's a swing. That's a swing. And so let's just say I come in here, right? And I put my, oh, that's not what I wanted. Let's just say I put my stop right there. Like that. Orange. Okay, and so now I'm not gonna move that stop until we break the high, right? Because now I know that we've moved out of this range here. Because once you have this high and then you come down here and you put in a swing and move off of it, that's your little bit of a range, right? So once you break out, then I can tighten it to the next swing. So as soon as it broke out of there, I'm gonna come up there, and then once we get up here to my target, I'm going to be getting real tight on that stop, and that's going to come with experience. Trailing your stop. It's one of the more difficult things to do in trading is managing your positions, but it's the most profitable way that I have found is to trail your swings, and then if you're dealing on a really tight time frame, you can trail your individual candle bodies, which is what I do for my day trading. Is I'll trail one tick below the lows for my futures day trading. So like let's say that I get into a position. There's a nice reversal bar. No, nothing there. Let's see. Okay. So let's say that I wanted to get it long right here because this is a nice reversal bar. Looking like it's gonna come up. The candle bodies have closed above that 21 EMA. That's the green line. Okay, so it's coming down, and we get this bullish reversal bar. So I'm gonna enter right above there. I wouldn't trade this on the weekly for Ethereum, but I'm just telling you as an example of how I would trail candle body lows. So this bar would have been my entry bar. It would have triggered, and I would be in the trade. My stop would be below this bar by one tick. And then as it's moved higher and this bar closed beyond the high of this one, then I would move my stop one tick below that bar. If you're not familiar with futures, you're not going to know what a tick is, but just think of it as like a quarter of a dollar for 25 cents, basically. You wouldn't, those numbers don't work in crypto, so don't pay any attention to that. But basically, the important part is that you would have your stop below that bar. And then once this bar broke above this bar and closed above it, then I would move it below there. And this one, that's an inside bar. So what I mean by that is you have, here's your high, your bar, and here's your low. It's within the larger bar, so I'm not moving my stop. I'm leaving it down here. So that's what an inside bar is. So once this one closed, actually, I wouldn't have done that because the candle body, that's kind of a neutral bar. Let me see. Anytime you have a bar that has a really tiny body and you have wicks on either side, that's a neutral bar. It's a doji. I'm not going to tighten my stop on there, but this is just congestion here. You see, you got these two overlapping bars. You got these two kind of doji looking bars. This one's more bullish than a doji, but you get the idea. It's congestive. It's just kind of stuck there. So I'm leaving my stop down here while this all is going on. Once we break out of that and close here, okay, now I've moved my target to here, and the second I see that big bearish bar, the reversal bar, depending on if there's some sort of, yeah, there you go. Look at that. So you have your resistance right there. We get that bearish reversal bar. I'm just going to close that trade if I wasn't already targeting that. Well, actually, that's a good example. I am starting to ramble. I've had way too much coffee. I've had what? I don't know. I've got these Yeti metal cup things, and I've had like 3 of them, and anyway. So let's just say, for example, that I'm targeting. Let's just say I'm targeting there. I'm going to go ahead and make that green, right? So as we're getting close to my target, I'm right here, and then let's go ahead and break this down to the 1 day because we're on the 1 week. So it's going to give us a little bit more to look at. Where the hell to go? There it is. So, remember my stop would be somewhere down here because we're on the 1 week. And once we're getting real close to that target, I'm going to be getting real tight in here. So I'm going to be right here. And once we get, this is kind of, it's a neutral. once we get above here, I'm trailing below each of these candles, right? And so I'm not letting that profit come back past this one. I'm seeing that big rejection there. We've already kind of gotten real close to it, so I'm just going to close out. Go ahead and take profit. It's close enough, but that's a really good method of trailing your stop. So you start with your swings, and then you move to your candle bodies as you're getting closer to your target, and then you can depending on the situation, how aggressive you want to get with your trailing, how much profit you want to give back. But that just comes with experience and trying to figure it out. But starting with your swings, that's where you want to have your stop. Anyway, this video is kind of running on a little bit longer than I would have wanted to. But I did want to talk about that $45,000 target because it really is a real possibility. It's not as likely as 25,000, 15,000. That's really where that's where my ribeye is. That's where my stake is, that's what I think is the most likely target. But we could get there. So I'm just going to have to keep an eye on the price action, how aggressive it's moving up. And I'm going to have to see how large of a third wave we get. So, if we come up here and on this third wave, we rip straight to, let's say that this third wave just rips straight to 15,000, right? Well, I'm going to be expecting at least a fourth and then up higher. So we'll just have to see. I'll keep y'all informed on what I feel like's going on and kind of what I'm doing. But please go ahead and like, subscribe. It really helps me out. I need two more subscribers before I hit 400. So that's kind of exciting. Just collecting more friends. Anyway, I hope you all have a great day. Bye.